Okay, guys. First of all, I want to welcome you all to Order Flow 2.0. Okay, so Order Flow 2.0 is just going to be the same thing, the same Order Flow, just adding some things which might give you a probability trait. But I want you to know that you need to be trading this the way that you trade because it's not going to change how you traded before. It's just going to add on the way you were trading before. Okay, so there's not going to be changes, it's just add-ons. So what are the new things that we're going to talk about? The new things we're going to be talking about is Outlook. Sorry, it's Outlook here, and then we're going to talk about imbalance, and then Courtside. Courtside is not like something new. It's just a new website. It's not a new website. It's an old website with new updates that we're gonna be going through. It's gonna be easier to analyze the US dollar. Even other pairs you can analyze it from there. And then we're gonna talk about the dump money. What's the dump money? Something new. Accumulation and distribution. Some people knows about this if you've been in forex for some time. So it's something that can be helpful when you're taking entries or when you're looking at a directional bias. So let's um, let's start with the outlook. I want to talk about the outlook first because it's not much of a something that you will need to be what do you call. We will need to be analyzing and stuff. So outlook, let me open it. Yeah. So everything here is free. Outlook is free. So Outlook, you will find it on my FX book. So under here, you will see Outlook here, right here. So Outlook is what I've been showing you. Um, so what it is about is that mostly here, these are traders. These are traders who are registered, not all traders all over the world, globe or all over the world. These are just traders who are registered with my FX book, who have their accounts with my FX book. But if you look at the sum of funds that they trade, is even a lot of money. I think this gets to billion or trillion, I'm not sure, but look at this number. This is money. This three something comma 73 is a big money that institutions definitely want this money. But the outlook, what they want to tell you about is that you use it as a correlation, but sometimes it's not going to be a correlation. Sometimes it's going to go the way the market is going. Okay, so it's not like every time if here they are buying, you need to be selling. So sometimes you might be buying with them. So it's all going to come down to. That's why I'm saying this is just an indicator, sort of, for confirmation. Okay, it's just an indication of confirmation. So if you look at, let me open here. So if you look at this, it's on the daily. If you look at USDJ on the daily, it's very, very bullish. And when did we realize that it's bullish? It's bullish. From this area here, I knew that we were bullish. From the moment we broke the structure high, I knew that we were bullish and we made a low here and then a new high. So I knew that we were supposed to make this new low and go up to make a new high. This is the move that I traded, which was a very, very nice trade. Okay, but look at what was happening here on the outlook. So let's look at USDJPY. You see USDJPY on the outlook. There's 81% short rate. So you look at the volume in terms of lot size and how many positions. About 24,347 volume of selling in lot size. 57,260 positions. 18,325 only buying. 19. That's just 19%. So imagine how many people were buying here. How many people were selling here and how many people were buying. So you see, this is a good correlation. They are selling, but we are buying. So that's why it's very important to also use the outlook. But like I said, it's just something that you can use for confirmation. It's not something that you need to really base your analysis on and say that if the outlook is not going with my analysis, I'm not going to trade. No, you will still need to use order flow 1.1, 1.0 for all the. So, but let's look at the KJPY. KJPY is very short, 76% short, 24% long. So if we check a JPY here, if we check a JPY, there was a short trade because it only went up on Friday. This one, unlike that one, it only went up on Friday because it is the daily channel. So since Monday, when was Monday here? This Monday it dropped. Since Monday, it dropped from this high all the way to this low, and on Friday it went up. So by the look of things here on the outlook, I don't open trade on Friday. So if I wanted to be trading, I would have traded this sell move. So you see that this one was going with what is going with the outlook. So that's why I said sometimes what is happening on the outlook, it is what will happen on the chart. So these ones are not always going to be wrong, because if you check down here, it will show you how much profit they have made. Average account profit, see 65. So they do make profit. Average account loss 32. So you can even see that this is even small. So that's how the outlook works. So that's how you need to view the outlook. So you view it for that only. That's what you view it for. You need to look at the outlook as like your confirmations and all, not base your trade on it. So number two, before I talk about which one should I talk about on number two, because I don't want to be analyzing. Okay, number two, let's look at imbalance. Yeah, it's fine like this, I think. Number two, let's look at imbalance. So what's my imbalance? Imbalance, it's simple as that, an area which is not balanced. The market needs to be balanced all the time. All the time, the market needs to be balanced. So let me go back to the chart. Every chart has an imbalance, guys. Every chart has an imbalance. So imbalance is areas which the market is not balanced. Simple as that. How does market get balanced? There must be buyers and also sellers on that area. So if I'm looking at an imbalance, what kind of areas I'm looking at for? So we have a bullish and a bearish imbalance. A bearish imbalance is balanced by buyers. So those sellers who are selling on a bearish market, if they're not balanced, buyers will come and balance them. So what does this mean? It means that if okay, if this market is going down like this, and it's okay, do it this way because it's a bit difficult to draw imbalance with these lines, and then the market continue to go down. You see this gap here. This gap here is an imbalance. This gap here, but the way you look at imbalance, you will need to look at them with highs and lows. It's all about highs and lows. But this gap here, the market will not gap. I'm not talking about those gaps that you know. I'm talking about gap on a candle. This is a down candle, but there's going to be a space here where you will see this week. So this is another candle, and then this is the week of this candle. The week of this candle is here, the week of this candle is here, and the other week of this candle is here. So you see these 2 weeks, this week and this week, they are not balanced. They were only selling here. There were no buys. Every other place was balanced because there were both buyers and sellers. So that's what imbalance is about. So by imbalance will be that it's going to be just buyers and all no sellers. So let me show you on the chart how it will look like. Okay. So don't worry about the noise. I just hope it's not really affecting this recording because there's been people moving, my neighbors and all that. So, and I had to redo this video. I had to redo it because there were some things that I left out. So when you look at this area, you need 3 candles to look at imbalance. There's not going to be imbalance on just 2 candles. So let's say we're looking at, so if this is a bullish candle, right? So if you want to check bullish candles, we look at the high of that previous candle, and then let's say that maybe we had another candle here like this. Okay, and this is the high, this is the low. So if it's a bullish imbalance, we're going to look at the high of the first candle, and then the second candle is the imbalance candle, and then the low of the other candle. So if this low is here, then if we could draw it like this, so imbalance is going to be right here. I I hope I'm making sense. If this has not made sense to you, you will need to look at some videos on YouTube, guys. Maybe those guys will explain it better. But if I'm looking at it in balance here, if I'm looking at these three candles, okay, these candles, they can't give me an imbalance because you can see this is high and then this is high. So there's no space here which is left so that you can connect a low, because if you connect a high, you need to connect a low. If you connect a low, you need to connect a high. So there's no imbalance. But look at where I have imbalance. There's this high. So now I need a low. Look at this going back. Here's my low. That's my area of imbalance. Simple. That area right here is an area of imbalance right here. This market was not balanced. So price went back to that area. Then now it's balanced by this candle. This candle came. This was a bias. They were just selling here. They were not buying. So the buyers came and balanced that market. So let's look at another one. Let's check the other one that we have. Do we have an imbalance here? This to that. Yes, there was. Just delete this. There was another one. So some of them might be small. So you see this to this area was not in balance. It was not balanced, but it got balanced by this move down. So let me look at another one. Let's go back, go back, go back. Let's go back down, go back up. This low and this imbalance right here. So let's go. This and this, they're balanced. See, these ones are balanced. And then let's go back. We find these other ones. So as imbalance, I just use them for targets. So if you don't understand, you don't understand them, don't make them a big deal. I use them for targets and liquidity. They're a very good area for liquidity. Very, very good area for the market to look for liquidity. So we have this one. You will find imbalance a lot of times in the market. We had a very wide imbalance, this area here to this area up here. So it got balanced right by this move down. So like I said, if I was selling somewhere up here, I can look at this area as my target, even considering this low as well. So when I start to do the analysis and stuff, I will show you how I look at it. But this is how you look at imbalance. Okay, so that's what imbalance is all about. Areas which are not balanced. Okay, so if you see this, you're going to look at this high and then look at the high of that other low. So this is a high, so it was going to be the low on this candle, not this one, the middle one. You look at the candles, but this one is balanced. It's balanced because there's no space between those two. But when you look at these ones, like you look at this candle, this low, then you need to look for a high. This is where the high is. Got balanced right here. Half balanced, fully balanced. Okay, so that's what you need to look for when you're looking for imbalanced areas. So let's go and talk about what's next. With this thing, I'm still going to be very much on the chart. So now we're looking at CoreSite. So you guys know, those who studied with me, those who did the course study with me, know that we used to use this website. Let me just open it. We used to use Trading Star for our court reports. This is the website that we use. So the reason why I stopped using this website is because first, when I started to trade court, I used to trade court this way. So let me just open a US dollar for this example. Those first of all, when I used to trade court, I used to trade court with just one date, one previous date. I didn't do that 4 weeks thing first when I started trading with court. Then I realized that no, one report is not enough. It doesn't give you much bias. Then I started to increase, and then up until I realized that 4 weeks is a very good average. It works much better. 4 or more weeks, but 4 weeks is like it's just perfect as it is. So I used to use this website. So we would come here and look at the asset manager and say that okay, asset manager 6 on long, 6.5 on long, 10,000 on shorts, and I'll go and look shorts. So imagine if you go to dollar and look for shorts now with just this information, you're doing the wrong thing. So This website did not have even previous dates. This thing that you're seeing here is new on this website. This way it says view historical data is very new. It's new, so it will show you even previous dates. One thing that I didn't know about this website is that also down here, it works the same way this other website works. It's opening, but let's leave it to open. But it works the same way that other website works. So how does it work the same way? So if I want to check my buy and sell, then I will come here and look at my asset manager on long. This is long positions, right? This is long. So I will click here to check that one out. So asset manager is what we want to see. Now I'll click this to take this out, and I will click this to take this out. And I'll click this to take this out. Then I can just zoom. If you zoom there, you are looking at dates which are far. But if you zoom it like this, you are looking at recent dates. So if you're looking at the last 4 weeks, it's going to be this one. This is the one that just came out recently. Then we have this one, January 19, then we have January 12, then January 5th. Okay, so it's the same dates that you have here, which is 26, 19, 12, and 5th. So those are your 4 weeks. So see how you're going to look at it from here. So it's going to tell you how much long you have. So you can see 5.3 here, then 5.2. No, sorry, actually from here, 5.2, 6.3, 6.4, and 6.5. So there's just an increase here. You can agree that we're just increasing here on dollar on longs. Okay, then you check the shorts. Shorts are down here. So you will do the same thing and check and check and check and check and check even this one. Leave this one. Then you will check the same date from the 5th here. 5th, we have the 10.5, 10.02, 10.029, then 10.0550. So there's like a slight increase, but compared to that other one, that one is increasing more. If you look at this, if I can draw this here, which might not take, if I can draw this here like this, and draw this like this, and draw this like this, just actually another thing this actually. And then I take it up to that area, you can see that it's like there's a correlation here. See? This one is showing a drop, but this one is showing some increase. So I would rather be looking at buys at this point. But so that's how. So you can look. This is what I wanted to talk about on this code sites. New changes on code. So you can look at even other. It's not just going to be used though. All those are the ones that you want to look at for here. And please, guys, don't make mistakes. I know that there are people who trade VIX, volatility, what. This VIX features is not about that. It's not about those things. It's not. This is about VIX. There's something that's called VIX. If you go to TradingView, you just search for VIX, you're gonna see that VIX is not volatility index that you find on Deriv. Don't do that. Okay. So I'm saying this. So don't ask me about it again. I'm saying it on the video. So we have US dollar index, South African rand, Swiss franc, Russian ruble, Japanese yen, Mexican. So even this one even has more, but we'll also find them on that other one. Exotics, New Zealand, Euro, Canadian dollar, and also about Euro. Don't ask me about if you can analyze Euro, FX, British pound like this. No, you would look at Euro as it is, Euro. As to with the right British pound, sterling, Canadian, Bitcoin, Australian. So all of them are here. You will find all of them. So that's what I wanted to mention about the new report. Okay, so let's go back and go talk about. So the money accumulation and distribution is something that I'm gonna mention on the. So now it's going to require us to analyze. But before we analyze, I want to talk about TradingView. Some people can't even use TradingView that much well. So TradingView is a very, very good website, guys. What you can do on TradingView, you can do on MT4. And what you can do on MT4, you can do on TradingView. Hope I'm making sense. So let me just open this. We're gonna come back to that one. So let's analyze the way we analyze. Okay. So let's say I want to draw my order block down here because I have an order block, or I want to draw it down here because I have a new order block here. Because this is not an example of a trade that I took, but it's just an example of the market, how the market is moving. So if I'm looking at a break of structure of this move, there's a lot, but the first one that you can see, break of structure of this move started here. So the first area it broke was right here. So this was like the first area that it broke, and then broke this area, and then this area as well up here. This one I don't like it, but this one I like it because it's an engulfing, and also this one. So if you want to label this as something, so you can just right click on it and say template and then save as. Okay, save as. But if you want to label it, you can just double click it. It's going to say text. So if you want to name it break of structure, you will name it break of structure. Then you can come here to template and say save as. Okay, then I can say save as, and I can say break of structure, just for that example. Now say okay. So every time I'm gonna draw a new, let me delete this one. Every time I'm gonna draw a new one here, it's not gonna write what it is, but let me show you what I can do. So I can just right click it, or if I don't want to right click it, I can just click it once and then come here. See this thing down here. You can just come here and press this, and then go choose my break of structure. So you'll see it's going to change. You see, so that's how. You can anything, even if it's not break of structure, even if it's just this, if it's this other block here. So I can name it that. Okay, I want this other block to be maybe demand. That's not how we name them, and I can name it demand. You see, it's gonna right there. Then I can save it as well and save drawing template as. So that's something that you need to do. You know, that's what you need to know about. You will have these templates, and then you will use them that way all the time. So let's talk about accumulation and distribution before we talk about the dump money, because the dump money is something that we're going to talk about when we already have our other blocks. Distribution and accumulation is what is simple as it is. Distribution which when sellers are preparing to sell. Accumulation and when buyers are preparing to buy. So this is how it looks. So if the market is coming down like this, and it finds, we want to see this happening on an area of demand. So we start to see the market slowing down like this, breaking structure to the downside, then break a structure to the upside. That's a sign of distribution. And where did that distribution started? This is if I'm drawing it, I'll draw it from this area to this low, because this is where it ended after this move. This is the area where the market was distributing. So this I was accumulating. So accumulation will be manipulating structure on the low side, manipulating the lows like that. That's how the market, that's accumulation. So like I said, you want this to be happening on an area of demand. Okay, that's what accumulation is all about. That's what accumulation is all about. Okay, so one thing that you need to know about accumulation is that you can also have a reaccumulation. How does reaccumulation look? When the market goes up, do the same thing like this. You mostly call this a correction, so which is fine. That's the name for it. It's corrective structure, or what's the other name? Okay, I forgot, but I know that it's a corrective structure, because after an impulse comes a corrective structure. So this one will end after here. So this is like an accumulation again, which is called a reaccumulation. So it's a reaccumulation. So I think I didn't take this one to be, but this one you can just write reaccumulation like this. Okay, so I'll put it on the bottom. So reaccumulation, this one is going to be like the normal accumulation. So this one is for continuation, this one is for reversal. Okay, so same thing, the manipulate structures on the low. Then we have distribution. So distribution will come after. Nice move up. So let me just check this like this. This move can make sense. Yeah. So this one, it's your distribution. So sellers are getting ready here. So this one will manipulate highs. This one will manipulate highs. Okay. This one will manipulate the highs. Then we have this one where the market is going down already. But this one is what? Continuation one. So it's a redistribution. In other words, this one is called redistribution. So you will have your redistribution like that. And price will definitely likely continue to go to the downside. So these things are very easy to spot in the market. You just look at after, you see them when they happened. So this is not something that you pre-see. So you can't pre-see this. You only see this after it has happened. So what am I talking about? I'm talking about, okay, we have one here. Just very clear. See after this move happened, the market started right here, started to slow down. To the low, that broke everything, it's situated down here. The market started slowing down. That's a sign of accumulation. It's simply the sign of accumulation. And after that, the market does what? Goes up. The markets will go up after accumulation. And then if we look for an area of, so I'll have to see the clean one. Here's another one. There's another accumulation. After this nice move down, the market starts to what? To accumulate here, right here. This is an accumulation. So I'm not finding distribution, but it's probably it's because this market was very much bearish. Okay, with me here. Might even end up opening the lower time frames, guys. Because this thing don't matter which time frame you're looking at them. Any time frame will give you the same thing. This one is fine. They move up. We start to slow down. You see how the market was slowing down. Let's look at it as it's a daily time frame. The market move up like this and start to do this. So that's a distribution. After that, it will just drop to the downside. Same thing here. After this nice move up, start to distribution, then we move down. So these are the things that you need to understand on the market, because they survey people, they show what do they show you? They show you that the market is slowing down. That's what they show you. They show you that the market is slowing down. So that is all for accumulation and distribution. So we'll always talk about these things in the coming videos, and even on this video when we do examples if we find them. So these are the things which are just add-ons. Like I said, these are add-ons on the 1 point. These are just add-ons. So this does not change how you look at market and all that, or how you trade. You can still take trade using order flow 1.0, but these add-ons can just help you. Touch up on liquidity. We're going to talk about this thing. We're going to talk about the dump money. touch up on liquidity. What are touch ups on liquidity? So let's talk about this one. Touch up on liquidity. Touch up on updates, which are just our liquidity. So number one, we already talked about imbalance. Imbalance is an area of liquidity. If I'm looking at this area here, where the market is bullish, this market is bullish. So if this market gets bearish, there's an area of imbalance down here. Let me use this tool to draw the imbalance. It's an area of imbalance down here, which is not fair. So this is like a side. So if this market is going to be selling, this is the first area where you can look for liquidity on the downside. There's no equal lows that I'm seeing here, so there's no any other liquidity that I'm seeing, but this is the liquidity to the downside. And then let's look at the upside. To the upside, do we have an area of this? Yes, we do. I already know where it is, so I'm just, if we are on this market here, so you can draw a line to see where it is. So you can see that the only area that you have, it is not here. So if it's not here, it has to be here. It can't be here. It was here, but this one is filled. But we have the one that we have, which is still fresh, is up here, right up there. Yeah, right up there. So we have that as our liquidity, which is in balance. And then let's look at other liquidity. We also have right around the same area. So we also have this, which is what? Equal highs. So I already have this equal highs. So I can just write it like this, equal highs. So once this equal high is manipulated, so you need to know that once an equal high is manipulated, it will change to be a liquidity. So what does it mean? You will likely see that I have LQDY. That means that the equal highs are manipulated. So this is high LQDY. This means that it's manipulated. Once price does this to its, once price go through it and manipulate it, it will become the LQDY. But right now, as it is just equal highs. So EQH is equal highs. So it's like the reason why we call it equal highs, we can't call it double tops and double bottoms because there can be many of them. So where are my equal highs? This is just, they're not straight, but these are equal highs. They're fine. The other ones that I had are down here, which this one were also equal high, but now these ones are what? Are highs LQDY, high liquidity here. So that's you are learning these levels, okay? So if you want to name it, this one I already name it, but you can see LQDY. When you save it as a template, if it's for the high, you can just high LQDY, which you can see that you can put it on the bottom, center, middle, left, right, so you know you can play around with these things. So I will also send you these things on how you can put them. So we have this. So we have other forms of liquidity. Okay, guys. We're talking about liquidity. What are other forms of liquidity? Other forms of liquidity are areas where the market creates a liquidity area, but not equal lows or equal highs. So what kind of areas I'm talking about? If I can just, let me just go to the lower time frame. You see this area here that they are buyers. This area, if I want to draw it, I can just draw it like this. But I will label it the same thing because this one is already manipulated. I'm just going to look at lows, LQDY. So these were liquidity areas, but they are not equal highs and stuff. So the market push through them, then go back. So those are touch-ups on liquidity. So you need to know that liquidity is not only going to look something like liquidity is not only going to look something like this. Liquidity will also be things like this, where you know that the buyers are coming in trend. These are like a trend line liquidities. In there, they will sell and then manipulate even those sellers who are trading there, breakout, and then after that, take price up. Simple as that. So those are touch-ups on liquidity. So those are things that when you see them on my analysis, you will know what are they and all that. On your analysis, you're definitely going to add them because you are learning them here. So this was a 4-hour area of LQDY, which is the area that I took a trade around. So let's talk about what dump money is. So dump money is simply a move. So to us, this is like a corrective structure in the normal way, but it's a move that tests the area we want to be taking our trade on. So if you have this demand and you have this, so you have this move, this move, this move, this move coming down here. This is your area of a dump money. Why? Because the sellers here, that's a liquidity. Dump money is sign of liquidity. The sellers there, the sellers, trendline traders at this point. Let me call it that. So trendline traders are selling. And then we know that when the market gets down here, what are we going to be doing? We need to see those confirmations, then we buy. All of those people who were selling there were taken out. So that's why we call it dump money. But I love to see the nearest area as my dump money. By the nearest area, I mean like these areas which are much closer to each other. So I don't like to draw it because you will start to think that, oh, this guy's trading the trend lines. No, I like to look at it like this. Sellers, then we swipe them, we wipe them out. So if I can just open this one here, you can see this is the area. This one did not come through well because I was looking for this to come down here. So this one was for it to come back down to this area. So I should just even delete it because it did not come the way that I wanted it to come. But even this one is no longer equal highs. This one is just high liquidity. So we have high liquidity. So even this one just got manipulated, no longer equal highs, high liquidity there. Okay. Just these ones right here. So, and then we have, so BOL is break of low, so break of structure low, break of structure high is BOH. And we have accumulation, which is this is your accumulation that we have here, because this market came and I started this accumulation right here, coming up with a nice move and start to accumulate, then push up. Then we have LQDY on the lower side. There's a lot of things. Then we have OBE, which is the entry order block, and then OBD, which is the higher order block. So you can just label them like that. It's not necessary to label these things. It's up to you actually. It doesn't make much of a bigger change. Okay, so let's go back to that clean USDJPY. And then now we're going to be analyzing. We're going to be putting everything on work. So let's start with it. So we're going to look at everything that we talk about, and we're also going to look at Euro, GBP, and then we're also going to look at KJPY. Okay, so then we'll be done. So this one we just did analysis here, and then we saw that it was bearish, but I just wanted to go through it again. So you can use this website to do cut analysis. It's fine. It's up to you which one you're comfortable with. Okay, it's up to you to use the one that you're comfortable with. Okay, sorry. So if you're using this one, then you'll do the same thing and check every other thing, and then look at your 4 weeks. Then your 4 weeks will tell you. So at this point, we're not going to use the 26 because we're talking about something that happened last week. This from the 1st to 26 is what we're going to be looking at for next week, for the coming week, which is going to be the week which is starting on 1st of Feb. Okay. So everything that we traded was based on, let me just use annotate here. 1, 2, 3. Okay, it was from 1, 2, 3, 4. So you can see here that, okay, market was increasing their lungs and all that. So that was that was enough for me to have my buyers are okay. If they're increasing longs, what is also happening on the shorts? So I checked the short. Then if you check the shorts, you will see what is happening with the shorts. And two, see, okay, so this is US dollar, right? So then I saw that the shorts on the 29, you have an increase, then a decrease, then a slight increase, so which was just still showing some bearish sentiment here. So I was like, okay, I have this. Now what else did I check? So now I went to I checked my Outlook. I was like, okay, Outlook is going well with the COT, which is a good thing. When your COT is going with the Outlook, it's a very, very good thing. Then here, because this move we didn't have, this move is the move that I traded. We only had this move down here. So I saw that, okay, this is like a what on a higher time frame. Market up, market start to manipulate started structure to the downside. This is like a bigger accumulation happening here. This is like a big accumulation happening here. Okay. So there was a big accumulation happening here, and there was a break of structure right here on this time frame. But we didn't have any sign of this, any demand here. So I have break of structure. I know I have this market slowing down like this. So I have this accumulation. I have this. But then I took this down to the 4 hour. On the 4 hour, I saw that we also have break of structure here for the 4 hour. Let me just double them. So break of high, the break of high. Then this is our. If I'm labeling this because it's on the higher time frame, it's going to be accumulation higher time frame, accumulation higher time frame. Because we found this on the daily, right? Then I saw this, I was like, okay, fine. Then I saw my signs of liquidity right here. So there was, so I can just do it like this one. So anyway, it's fine. I just don't want to draw too many lines. So this was manipulated because you could have drawn it like this. Is fine. That's what I'm saying. It's fine. But this was just drawing it on the lows. It shows that I'm covering all of this according to myself. I know that if I draw it on the lowest low, I know that I'm covering these. So this got manipulated. I was like, okay, price is starting to show some manipulation. Then we start to see price. Okay, like I said, I was looking at this area down here first, which price did not come back to. Then price gave me this other area up here by breaking some structures here. So if you check here from this down move, it started to break structures as well. So this was like that for our area of demand right here. Okay, so we can get rid of this one because, like I said, I don't want to have a lot of things on my chart. I know that I had an accumulation. I know I have a break of structure high here. So break of structure high. I have my liquidity. I don't want to waste too much time on this thing. So after that, because I'm analyzing, and then price went up. Then I want to see price come back to this area, right, for my thing. So when it was coming back, I saw that there were sellers coming in, getting above here. So if I open this on the 5 minutes, actually, let me open it on the 5. If I open this in the 5 minutes, you will see that this is a trend line for some traders. See? Start to see these touches. They see these touches, they see these touches. Let's say they even understand the accumulation, because accumulation is not an order flow thing. Start to see this moved up like this. So no, this is going to go down. Start to sell, then they will have their stop losses just above those areas, which is the areas that institutions want to see. They have their stop losses. They start to sell, having their stop losses up here. Then okay, price comes back to my area now. When price gets into my area, start to look for those confirmations. So like I said, you can look at, I've talked about this so many times. You can look at 1 hour, 30 minutes, 15 minutes, the one that you're comfortable with in terms of structure, the one that you can take trades on. So this one was what I was comfortable with because I saw this nice engulfing area down here. See this down. And then we have break of structure where? Up here. So break of structure. And then followed by nice area down here of engulfing. So this is where I got involved. So we should do something like this. So okay, let me draw this the way that I draw them. Let me start from the 4 hour because I want to draw everything the way that I actually draw. So the 4 hour, we have, what's the line? We have this. So let me just say this is a OBD because this is a direction. OBD is for the block direction. Okay, and then it was up on this high here. Then this one, which is only 15 minutes, is for entry. So I can just draw it like this one, because it's for entry. Then I will draw it this way. Guys, like I'm saying, if this thing is making your head boil or something, focus on the first thing that I taught you, because these are just extras. If they're giving you a hard time, stay away from them. Leave them. Don't force to be using them if they're giving you a problem. So we have this, which is where we entered. So this is the entry, which is like a 0.1, and you can 4 to 5. Okay, 4 to 5. And then you could have got involved in this trade and then targeted the areas of imbalance. Like I said, we had an imbalance up here. So let me just imbalance. So I love to target if I'm buying, I will target the low of the imbalance that way. And then I also have up here, what do we also have up on these areas here on the 4 hour, because we're taking this trade on the 4 hour. We have these equal highs, which you could have targeted, which are now no longer equal highs, which is just high LQDY. You also have this one, which are just near the area of imbalance. So these are equal highs because price is not yet reached there. So these equal highs, here these ones, there were these ones down. I think it's these ones. So you can be holding this trade all up in this area, or the area of imbalance. You can hold it like that. If you're on this trade, I mean, if you've taken this trade, you can target those areas if you feel that this price is going to continue to go down, or you can target these areas, which is where I made my 15%, which is where I got out. And I have one last position, very small risk. It's even on break even, which I'm targeting these equal highs up here. Okay, but that is how you will label. That's how you label everything. I will also send the labels on the group, but that's how you would label, and that's how you would take your trade. So we also had, which I may forget to mention, we also had an accumulation here. After this strong move, price started to what? Before giving us that order block, started to accumulate again. Started to accumulate again, accumulating price, slowing down, showing that they want to go up. Accumulation is pretty simply that we will also have accumulation. I don't always label all of them, but this was also another sign of accumulation. This is like a reaccumulation. Okay, it's like a reaccumulation, and this was also this area here. Also this area of liquidity here. So sometimes I don't label everything, but You need to train your eyes to see these things. Once you train your eyes to see these things, you will be fine. You will trade well. So let's look at KJPY. I didn't take KJPY, but I want to talk about it. Okay. I don't like to use FXCM actually. Let me use this one. Yeah, that's KJPY. Okay, she's between the two. Let me just see which one I just. I think it was, yeah, it was KJPY. I'm surprised I opened the weekly. Okay, so if we're looking at this, and then we check our quote here. Check our quotes, risk hedge, risk hedge. Then we check first our long position. Check our long position first. Okay. Remember, we are working with not the most recent, we're not working with this. So what do we have from the 29? 29, 61, then down to 60, then down to 59, then down to 58. So this one was decreasing. Okay, and the longs are being closed or longs are being removed. Then look at the shorts. 29 shorts, 18, 18, 23, 26 shorts are being increased very much. So if you come here, because the best break of structure for market is when the market closes even below, but even when it just violate the lows, it's even fine. Okay, so this went up to those areas. This was the area that you would have had been looking at around, but there was no break of structure when you're looking at this on Monday, because this is Monday, so you just had these two candles. So, but if you check in the 4-hour, as the market continue to move, started to see a break of structure right here, break of structure right here, right. You started to see these areas where the market is breaking structures. We have some equal lows down here for targets. Take this trade and these are equal lows. We can also have this area here of imbalance. Let me just do. You have this imbalance, so imbalance right here, down here. So this you would have traded a move, because I saw that there was a nice trade because price went down and went down, so it was just constantly created this one, which is the one that I'm talking about, the one that price came back and tested around on the 26 and then dropped all the way down. So if you're looking at this one, the only area that he would have gone about, I think, was the 5 minutes. Like I said, I didn't take this trade, but on the 5 minutes, right around this area, you would have got involved for this trade right in this other block, because it's actually took this out and this out. So you would have got involved and got filled right here. So 2.7 is just sort of around 3. So you can go to 6.7. It's fine. And then in terms of targets, what would I rather be targeting on this kind of trade? I would have had my target right down there. Or target, I think there was an imbalance somewhere here. Yeah. There was this imbalance which was right on this strong OB. So you could have looked at this area here for 4%. which would have hit right here, not even far, right there on the microST movement. So you could have targeted every other target you would have targeted, you would have hit. If you targeted this, you would have got that 7% and all that. Even if you targeted this low, you would have got around 8%. But I didn't take this trade, and I would have made some profit here because I would have taken my partial at the first imbalance, take my partial here, and then take my final position right around this area, or even probably have my last position right down on the imbalance, probably somewhere here, which is price wouldn't have came in hit, would have probably came in back and hit my break even or my trading stop somewhere. If those are personal decisions, guys, when you're trading, this is something that I need to also mention. If I haven't, always make sure, let's look at your GBP, which is the last one. Always have always have this one. I missed it actually. I was looking to buy. Always have always journal your trades. That's what I want to say. Journal your trades, because if you don't journal trade, what are you doing? You're not learning anything from your mistake. You're not even learning from your wins. So you need to journal your trades, and then you will know the mistakes you're making, so you can easily correct them. You will know where you're going wrong. Because I'm your mentor. I can be a journal. You can't come and tell me that, oh, this trade didn't go this way because of this. I had a trade last week which didn't go well. When I ask you to send analysis, you say, this and that. So you see, always journal your trades. Always journal your trades, so you know what mistakes you're making. So this one, 29, went up, then down, then down. So longs just going down here, and then I think this one was neutral along with GBP. So someone has to ask me about this, and I started to look at it. 29, then down, then up, then down. So shorts were even being closed very much compared to how the longs were being closed. Then I looked at this one and I said that, okay, this is neutral. And sometimes I love to trade this messed up markets. But what I saw first when I opened the daily, what do you see first? An accumulation. This is going to be like a higher time accumulation. Higher time accumulation means that it's going to be a 4-hour or daily accumulation. This is what we call higher time frame accumulation. Then when I started to zoom, there was this area. Of demand. This is what the low was. So this was an OBD demand, so the block for demand. See, it's very nice, fresh and clean. What did I see after that? This trade, I don't know, I missed it. This trade was just everything to me, guys. Should have got a lot of money out of this. Lows that were liquidated. So let me just put in the lowest low, because I know that there's liquidity here, there's liquidity here, there's liquidity here, there's liquidity. And then the stop losses are definitely down here. So price taking out the stop cut coming to this area. I would still want to get involved in this trade if it continues better. So I start to look at my lower time frame for entries and all that. Probably if I was looking at this one, I would have probably had this area and get stopped out. But I was looking at this. I don't remember who told me about this, but there was one student, and I started to look and I found this nice area here. And then I also found, so it went down. So this is the area where I wanted to get involved. There was also this nice smaller time frame liquidity that was created. So my entry was supposed to be coming from this area. I took the whole area. Let's to the OBE demand. Yeah, it was supposed to be like it for my entry. Which price did not even get me in. It was supposed to be entered somewhere here. But did price come back? No, it did not. Price did not come back to my area. So this high was the area that I was targeting first. So if we open the daily and start to look for areas of imbalance, then you will find them. Like I said, you will always find imbalance. So we have this. That's our imbalance area. Because this is the gap. This is the whole gap. This and this is the imbalance area here that you could have targeted like this. This is the imbalance. So these are the area that you could have targeted. You could have targeted this dump money here because they're selling here, they're selling down to this area we want to pass. So we have this dump money here. So I could have targeted probably this here for about how much? 5%, or here for 5.9%. So this would have been a good trade if it went and hit my entry and went up with me, but it's just roughly still around here. So if it had went up even up here next week, it's fine because I would have held this trade up until next week. But so you see what I'm talking about. All these things that I've just showed you today are the things that you would need to look at when you're looking at the. Let me check the outlook for Euro GBP. So outlook is going with what I had, 65% long, 35% short. So that is definitely good when it's aligning with what I'm looking at. But this is what I would have had on this analysis. We have this accumulation here, which is what came to my. We're supposed to come to where I wanted to get involved. We have this accumulation right here. We also had this accumulation because price pushed down, then started to do this. So like I said, that's because you always find this accumulation and distribution. So price made this strong move down, then start to slow down. Yeah, so you can see by the look of it, if you look at this, if you draw it like this, you draw this and this, and then up. I'm gonna take this on the other side, outside of here. If you look at this, see how the market moved. This whole thing happening here. It's an accumulation. Simple like that. So guys, when you watch this video, I hope it's gonna be helpful. That is all that you need to know about order flow 2.0. So yes, let me share again what we talk about. We talk about outlook. That's a new thing. Imbalance, new thing. Dump money, new thing. Distribution and accumulation, new things on the order flow. We did some add-ons here. So that is what you need to go and look at. And then I believe that it's going to be very much of a breakthrough in your tradings, and they will definitely make some money out of all that. So one thing that I want to show you lastly is this, but I'm also going to send it. the meanings of everything. OB is order block, OBD is order block direction, daily and 4 hour, OBE order block entry, so 1 hour to 5 minutes, distribution, sales getting ready, accumulation, buyers getting ready, LTF, lower time frame. So LTF and ATF, you will find them under accumulation and distribution. You saw that imbalance, IMB, EKH, equal highs, liquidity, BOH, break of high, break of structure. BOLW, break of low, break of structure. EQLW, equal lows, liquidity. LQDY, liquidity manipulated. DMB, dumb money, liquidity as well. So I will send all these things. Let me just send them right away. Okay, so I will send all this, and then I hope that it's going to be a helpful video to your trading.